I think the market's consolidating and maybe trying to get direction from what the market does, because we did gain 28% from the April lows. We got to digest that. Now we're in August, like the dog days of August, where liquidity is lower. And I think that we're still holding our breath because we're in a period where the Fed isn't going to make an interest rate decision until September. So some of the key macro is kind of on hold. So I think markets are wait and see, but I'd say that pullbacks have been shallow.
We're in a bull market. Trump last night came out and talked about crypto assets being eligible for 401ks. I mean, that's a monster pool of capital. And what we're just seeing is through these treasury companies, through all kinds of different avenues, the aperture of being able to buy crypto being widened and widened and widened. More avenues bringing people into the tent. I think one of the things that I actually didn't even comprehend is these treasury companies have done so well. The public equity markets are so much bigger than what the crypto markets were. And so as we're really broadening our reach through public equities into our asset class, you're just seeing tons of money pour in.
Tom Lee begins by characterizing the current state of the market as a period of consolidation. After a strong 28% rally off the April lows, the S&P 500 has entered what he calls the dog days of August, a time typically marked by lower liquidity and sideways movement. Investors are essentially holding their breath, waiting for direction, particularly from the Federal Reserve, which is not expected to make any interest rate decisions until September.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I think the market's consolidating and maybe trying to get direction from what the market does, because we did gain 28% from the April lows. We got to digest that. Now we're in August, like the dog days of August, where liquidity is lower. And I think that we're still holding our breath because we're in a period where the Fed isn't going to make an interest rate decision until September. So some of the key macro is kind of on hold. So I think markets are wait and see, but I'd say that pullbacks have been shallow.
Is it fair to say there's a more sober view from investors about stocks? I mean, you've been suggesting that this is a hated V-shaped recovery, even as we continue to climb this wall of worry until most recently where we've sort of sputtered in place.
That's right. I mean, it's definitely the most hated. I can attest to it from our conversations with clients. We can see it measured in surveys like AAII, where there's stubborn bearishness net still. And then we did the rounds, Fundstrat did the rounds with a lot of our institutional clients the last 2 weeks. And I think folks are very cautious, which is actually good for stocks. They're cautious because, of course, markets have moved and our clients tend to be valuation sensitive. But I think adding to their frustration is that during that April downturn, many were selling their best names because they were trying to get defensive, and then they haven't fully reloaded yet. So I think that's why there's still room for stocks to go up.
So your clients are valuation sensitive, which makes me almost want to laugh, because is anybody valuation sensitive to what's been going on in the market? We're historically well above the averages on the prices that you're willing to pay for stocks.
Yes. I mean, what we usually tell our clients, but really at the core, any fundamental investor is going to use valuation as really one of their anchors, is that the stock market had 6 stress tests in the last 5 years, from COVID to the bullwhip supply chain, to the fastest inflation cycle in history, to the fastest Fed hikes in history, then to the Trump tariffs, and then, of course, U.S. bombing nuclear facilities of Iran. Those are things that could cause catastrophes for earnings, but instead the S&P earnings have actually grown. So I think we're in the process of re-rating the S&P. So I actually think multiples will continue drifting higher.
Okay, so let's talk about other so-called knocks on the market. Valuation, obviously, one of them. They say there's too much speculation. You look at some of these stocks, meme stocks, low-quality stocks, cult stocks, and other things that have gone up a ton. Now, you're the chairman of Bitmine, which is new, right? Your role there is new. And I'm sure there's a lot of great feeling about you and the role and what's taking place there. Bitmine's up 65% this week, okay? It's up 1,000% since you became chairman. Respectfully, I mean, come on. What's happening with these stocks? What's happening with some of this fervor that feels like it's in the market?
Well, I think the dearth of IPOs over the last 5 or 6 years has shrunk the number of stocks in the in the U.S. stock market. There's not even 5,000 listed stocks anymore. So these names that are IPOing are scarce, and that's why they go up. Bitmine is really, in a simple way, you can value it on how much Ethereum it holds. When I joined as chairman, it had $4 of Ethereum held per share. That number is well over $25 today. So the stock isn't even trading at a high multiple of its Ethereum holdings. And it's well north of 25, but we've disclosed 25 previously. So it's actually, in a way, less expensive now than it was a month ago.
You know, bull market. Enjoy it while it lasts. Never does. We're in a bull market. Trump last night came out and talked about crypto assets being eligible for 401ks. I mean, that's a monster pool of capital. And what we're just seeing is through these treasury companies, through all kinds of different avenues, the aperture of being able to buy crypto being widened and widened and widened. More avenues bringing people into the tent. I think one of the things that I actually didn't even comprehend is these treasury companies have done so well. The public equity markets are so much bigger than what the crypto markets were. And so as we're really broadening our reach through public equities into our asset class, you're just seeing tons of money pour in.
When you understand what the president was talking about with 401ks, how do you think that's going to happen in practice? Are people going to be able to buy Bitcoin directly? Are they going to just be buying Bitcoin ETFs? Are people going to be able to buy levered versions of all of this? I mean, that's when it gets more interesting. Or not more interesting, but that's when
the devil's in the details. But you're going to see funds. I mean, the simplest thing is a Bitcoin fund, an ETF. But I think the devil will be in the details. There were already some people that were out there before this was happening, finding ways to do that. But again, it's when it becomes commonplace, when you can do it at your old, the place you've already been doing business with. If it's Fidelity or Rowe Price or whoever it is, you just pull more people into this ecosystem.
And so you don't think it's really about people necessarily, buying Bitcoin directly anymore? Do you think it's going to be via, I guess the question is, over time, how are people really going to be accessing this? And the reason why I think that's important, I think, is it sort of depends on what you think Bitcoin actually is.
So I'm in the lane that Bitcoin is digital gold, and it's a hedge against incessant money printing, right? It's a hedge against incessant bad fiscal policy in not just the U.S. but in the whole world. And so I don't think Bitcoin will be used as a currency. I think stablecoins will be, and I think you're going to continue to see Bitcoin appreciate as long as we have governments that can't spend less than they take in revenue, and we're not even close to that, right? This big beautiful bill is a beautiful bill for lots of people, including if you have a data center and you get a amortized appreciate all your capex in year one, right? There are lots of great business things, right? I think our economy is growing faster. But it doesn't do anything for our long-term debt. And as long as that debt to GDP keeps climbing, you're going to see Bitcoin prices keep climbing.
Ethereum, while similar to Bitcoin in some respects, has a distinct growth narrative. Where Bitcoin is seen as a store of value, Ethereum is becoming the base layer for decentralized applications, particularly stablecoins. Tom believes Ethereum's rails will serve as the backbone for payments, smart contracts, and digital finance infrastructure. He also points to Ethereum balance sheet companies, which give public market investors access to not just ETH, but staking yields and other financial innovations.
What about Ethereum? Because that's been on a run as well.
Yeah, listen, Ethereum has a story that's a little different than Bitcoin, which has always been we're going to be the base layer of trust where lots of projects get built on top of. And it's going to be so used by so many different industries and people that it becomes a currency itself, right? And that story's picking up momentum, especially with stablecoins, right? A lot of the stablecoins will be running on Ethereum rails, and it's a trusted blockchain. And so that, but don't discount the fact that, Joe Lubin and Tom Lee have set up these Ethereum balance sheet companies, treasury companies that have given public market investors real access to not just Ethereum, but staking yield, potentially lending, derivatives on it. And so that's pulling in money. And, prices are set on the margin. And when you have a couple $100 million a day of new money just buying, it draws people in, and you're seeing that happen.
Mike, final question for you. There's a lot of excitement, as you know, and you just described it, around stablecoins. The winner in the public markets around stablecoins right now is Circle. I imagine there's going to be a lot more competition. I don't know. How do you think about that stock, which, of course, has been itself on a rocket ship? But part of me wonders whether it's on a rocket ship in part because there is no other meaningful way in the public markets to play that right now.
Yeah, listen, stablecoins are going to be a big deal. It's going to take a while for stablecoins as payment coins, as stablecoins for AI, AI to AI rails to integrate into our financial system, right? And so right now, stablecoins are mostly used for liquidity in the crypto markets, right? They're the oil that allows trading in the crypto markets, and for overseas payments. And in that case, Circle and Tether, the two dominant coins, are probably going to keep their dominance. But over time, JP Morgan is going to have a coin, PayPal is going to have a coin, everyone's going to have a coin. And you're going to see other applications, and then you're going to see, I think, who actually wins this game long term.
The final section of the discussion centers around stablecoins, and more specifically, the public company Circle, issuer of USDC. Right now, Circle is the dominant way to invest in stablecoins via public markets. But Tom expects fierce competition to emerge as traditional financial players, JP Morgan, PayPal, and others, introduce their own coins. Currently, stablecoins are mostly used to provide liquidity in crypto markets and facilitate international payments.